Morning, friends. Welcome to Weekly View on Markets. Nifty has seen a cut of 1.36% for the week, and Nifty closed at 17,859. There was selling in Bank Nifty, mid cap, and small cap across many sectors. Nifty has seen bearishness during this week due to the outcome of the Fed meeting minutes. The Fed meeting minutes indicated that further rate hikes will be there in the US, and major economies across the world are going into a recession mode. So this has resulted in FII selling during the week and dragged down Indian markets. Bank Nifty closed at 42,188 with a cut of 1.86%. Mid cap index lost 0.28%. Small cap index lost 0.77%. India VIX is at 15.02, a gain of about 1% for this week. Now let us look at different sectoral performance during this week. FMCG, pharma, oil and gas, auto sectors were only the gainers during the week. Remaining all sectors ended in red. So FMCG, pharma, oil and gas, auto sectors have seen a gain of less than 1%. So most of other sectors were losers. Information technology lost about 2.32%. Media lost more than 2.2%. Realty sector lost about 1.38%. Private banks lost about 1.66%. So remaining all sectors were in the red with a cut of 0.5 to 1% for this week. Now let us look at Nifty chart. This is the daily chart of Nifty. We can see here the market closed in red for 3 days consecutively, and Friday also we have seen a major cut with Nifty closing at 17,859. If we look at the support level, taking into consideration the earlier support levels, Nifty has got a support at around 17,800 levels, and Nifty has strong resistance at around 18,200 levels. So it will be very difficult for Nifty to now cross 18,200 levels. So Nifty may consolidate in the range of 17,800 and 18,200 for few more days to come. Now let us look at Bank Nifty. Bank Nifty chart indicates a strong support at around 41,200 to 41,300 levels, and Bank Nifty has just closed across the long-term support level on Friday. So comparatively, banks are outperforming in the market for last few weeks. So I expect Bank Nifty may pick up in the coming week, and it may not breach 41,200 levels. Now let us look at Nifty mid cap. This is a Nifty mid cap index. So during this week, mid cap index has relatively outperformed. The fall in Nifty mid cap index was much lower comparing to large caps. If we look at the longer time frame, that is weekly chart of Nifty mid cap index, It is consolidating between 30,000 and 32,000. This consolidation may continue for some more time. Now let us look at Nifty small cap. Small cap index also has not reached the crucial support level on a longer time frame, that is on weekly chart. So small cap index also is likely to take support at around 9,500 level, and it may not breach 9,500 level, and we may see some up move in the small cap index in the coming week. So this is all about the technical view on the market. Automobile sales figures have come out for the month of December in the first week of January. So largely the car sales show a improvement year on year, though Maruti has shown a degrowth of around 9%. Tata Motors has reported around 13% growth in their sales. Hyundai has reported 20% growth, but the base is small for Hyundai Motors. Mahindra and Mahindra has shown an overall improvement with around 60% increase in their sales, especially in the SUV segment. Kia Motors and Toyota Motors also have reported growth, but their overall base is very small. Two-wheeler sales have almost ended on flat. So Hero Motor was a top seller with more than 3.9 lakh vehicles. TVS Motors sold around 2.42 lakh two-wheelers. Commercial vehicle sales, that is especially buses and trucks, has gone up by more than 20%, which is a good news for the economy. And also there is a rural demand which is driving the tractor sales. Tractor sales are up by more than 20%. This is giving an indication that the rural economy has started picking up well. The automobile data also corroborates what is given on the PMI index. The PMI index has come at 57.8 from 50.7 in the month of November, which is showing a expansion in the industrial activity. Services PMI has recorded a highest level of 58.5 in the last 10 months, and in the month of November it was at 56.8. This shows that the impact of COVID has gone away, and services sector, especially travel, tourism, hotels, holiday business, all these things have started picking up well. One good thing is that the diesel consumption, which indicates the industrial growth, has gone up by 13% on year. Electricity demand has also gone up by around 11%. So these all high frequency indicators indicate that economy is robust, and when economy is robust and it is growing, we'll see earnings of the companies also going up, and that is good for the stock markets. So what we are seeing is that the weakness in Indian stock market is mainly coming from the global developments rather than our internal factors. So major economies like US and Europe, Japan, they are not doing well, and that is likely to have an impact on Indian markets as well. Otherwise, the domestic demand in Indian markets and also the other economic factors look good for our economy. Ultimately, I expect the market to give a breakout on the upper side, supported by the strong economic and corporate performance. GST collections have gone up by more than 1.5 lakhs for the month of December. Consistently, the GST collections are coming above 1.5 lakhs, which is good indicator that industrial activity and commercial activity is quite stable in the domestic economy. RBI forex reserves is at 563 billion. Crude price is stable with around 78.69. It is hovering from around $78 to 83, 84 dollars per barrel in that range. And Indian rupee is trading between 82 and 83, and it has closed at 82.27. So these all indicate the stability of the domestic economy. National Statistical Institute has given the GDP estimate on Friday for the full year at 7%. So various agencies have predicted Indian economy to grow at 6.8 to 7% for this current financial year. So now NSO also has given the estimate at 7%. So we can look for around 7% growth in the economy for this year, which is the highest growth among the largest economies in the world. DIIs have brought around 2,756 crore. FIIs have sold 7,813 crores. As I stated earlier, FIIs have been selling mainly because they look at the global scenario rather than the Indian domestic scenario. So, because of the hawkish statement by the Fed, they have sold in the emerging markets, and Indian market also they have sold more than 7,800 crores. Despite these FII selling, our markets are not falling much, and I expect ultimately Indian markets to scale higher levels, supported by quarterly earning growth in the third quarter. So from this week onwards, that is from the week starting on Monday, corporate results will start coming out, and that is going to drive the market. And also, people will start looking at the budget expectations for the next year. The budgets will be announced on 1st of February, which will drive the market. So this is all for this week. Happy investing. So we will meet again next week.